talk about the 45-day rule. So this year, income limits were published on December 18th. And so that's the effective date for the income limits. But under Rev Rule 94-57, we have what's called a 45-day rule that says that income limits can be relied on for 45 days after their effective date. And the IRS in their LIHTC newsletter gave us clarification on this that said, hey, if you're placed in service within this 45-day window, you can choose to use either the 2014 income limits or the 2013 income limits. So in our case, income limits have decreased, so we would want to use the 2013 income limits. So if 2014 were higher, obviously you'd want to rely on the 2014 income and rent limits. But now let's talk about the rent floor election under Rev Proc 9457. The rent floor election states that you can have your rent limits effective on either the date of allocation for 9% or the date that you place your project in service. And you actually have to elect for placed in service. So what this means is that if you receive a LIHTC allocation back here within 45 days of the effective date of the 2013 rent limits, you receive that LIHTC allocation and you do not elect to have your rents determinant placed in service, that you can actually use the 2012 rents for a project that was placed in service all the way out here. And it's important to note that you can only use the 2012 rents. For income limits, you'd still run through the same test, and for this project, you'd be using the 2013 income limits and the 2012 rent limits. So you do have a disconnect. It's important to point out that that rent